Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we will help you understand the opening action of trade, the trading setup, as well as all the market strategies you need to follow for this fresh and new trading session as well. Now, as of yesterday, the index has managed to defend 25,150 odd mark. This happened both on Friday and Monday that we defended that, and that level becomes key on the downside to watch as well. Now, remember, today is also the contracts expiry session for the NSE as well, so that will play its part. But what we've actually seen is that the Nifty is also likely to start today's session on a positive note, as is indicated by Gift Nifty. This is because we've seen overnight cues positive from the US, and the markets are also expected to get influence from the September retail inflation data that came in last evening, that has eased to a 99-month low of 1.54%. And that's after the food prices have actually fallen by 2.3% in the month of September as well. This is on a year-on-year basis. This is the most benign print for this volatile and essential component of the household spending basket in December of 2018 as well. Now, we will also be looking at what the trading setup has been overnight. You've actually seen on your screens as well across the board. We have seen S&P 500 inch higher by 1.5%, Nasdaq up by 2.2%, Dow Jones also up by about 1.3%. This is largely led by the Broadcom and the semiconductor stocks, as Donald Trump has again tempered the tone on US-China trade that has eased the investors concerned as well. So the taco trade has kind of brought back the move on the Wall Street. Now, as far as the kind of stocks that are concerned from the tech space, Oracle, Microsoft, Alphabet, Apple, you can see all across these stocks that held up in trades throughout the trading session last night. Now, markets in Asia Pacific, they opened mixed in trade today, diverging from Wall Street's strong rally after US President softened his stance on China. This is following weeks of tit-for-tat trade measures and tense rhetoric that Donald Trump has been doing. Remember, on Truth Social, Donald Trump also posted on Monday, "Don't worry about China, it will all be fine." That's what he said, quote unquote. Now, after this, we've actually seen South Korea index rising by 1%. Japan's Nikkei, however, is still trading down by over 1% at this point. Hang Seng is softer by 0.4%, and we're also looking at the Shanghai index that's up by 0.3%. Gift Nifty again is indicating a slightly higher start at 25,319, but let's see how things pan out in trade. Remember, today is the weekly expiry of the NSE contracts. Very important day because India is one of the biggest IPOs again for 2025. LG Electronics will make its stock market debut. Today is also the day when Tata Motors will be in focus as it begins to trade out of its commercial vehicles business as well. So we'll have to focus on that too. Now, remember, earnings season is gathering more pace. Today, HCL Tech will also be reacting to its results that have been reported after market hours as of yesterday. Tech Mahindra will become the third IT major to report its results today after TCS and HCL Tech, while Irida, Bank of Maharashtra, Persistent Systems, ICICI Lombard, ICICI Prudential are some of the other companies from the insurance basket that will be reporting its results today as well. Remember, Canara Robeco HSBC IPO also is the last day for subscription, so that will be also in focus from the primary market space as well. Now, what we will also look at is how some of these stocks will react to the numbers that they have posted as well. But let's first welcome our guest on board, Mr. Abhishek Basu Malik, the co-founder and fund manager of Sri Rama Managers PMS, now joining in on the program with us. Warm welcome to you, Abhishek ji. Good to have you with us yet again. Help us understand first your take on the overall markets after 2 to 3 weeks of marking positive moves week on week for the markets. Yet again, we constantly feel that the resistance still is at play. We are not getting a chance to go beyond 25,400 or 25,500. That still remains to be seen as to what will be the key trigger. What are you penciling on? Do you think it's the earnings season that can actually drive further momentum for the markets from here?
So, first of all, good morning to you and all your viewers. I think, like we discussed last week, the market is stuck in that range, 1,000-point range on the Nifty. And my sense is that the earnings season is not going to give sufficient fillip to the stocks in the market. So it's more going to be the commentary rather than the earnings that will be determinant of how the market behaves. And obviously, the market is not like this because of the numbers. It is like this because of extraneous factors. And if tomorrow or sometime there is a trade deal with the US, you will suddenly see the market mood completely changing and market galloping from here if the trade deal is reasonably favorable to India.
Okay, got that. Well, it's 9 a.m. Let's quickly look at how the markets are trading. Well, fantastic pre-open tick. You can see a 300 point of an uptick on the Nifty, 25,515. We could have just probably looked at this and thought that, this is the reality. But I think this will settle, and we will have to wait out for some more minutes to find out, where the final move is. Right now, a percent higher. That's reflective of the big move, on the D Street. Let's actually wait it out to see how this settles down. But let's actually pull up some IT related stocks. Let's pull up HCL Tech. That's the big number that we will be watching out for because of the earnings that have been posted sequentially. Remember, IT stocks have been in focus for some time now. Remember, revenue is up by 5.2% for the company at 31,942 odd crore rupees. We've seen EBIT improve by 11.3% as well. We've also seen the EBIT margin up by 94 basis points for HCL Tech at 17.22%, and we've also seen the net profit up by about 10.2 odd percent, coming in at 4,235 odd crore rupees. LTM attrition at 12.6%. When we talk about the new deal wins, they are at $2,569 million. That's up by 41% on a sequential basis too, and a 15.8% jump on a year-on-year basis as well. Let's try and understand the mood on the IT space with you, Mr. Basmalik. First, it was TCS. Now it's HCL Tech. How are you looking at these two numbers that have actually come in? What has stood out for you in the earnings?
I think, like I just said, the commentary is going to be more important than the numbers because the numbers are slightly better than expected. Nothing, to write home about. But the commentary is probably slightly, again, better than expected. I think with the and I think HCL Tech for the first time started reporting AI numbers separately. So that's a positive, and it is going to be a direction for other companies to do the same, and which basically means that now there is going to be a lot of focus on how much revenues is going to come through from the new AI or the AI vertical. And when you start reporting these numbers internally within the company, there is a lot of focus to drive growth in those numbers. So directionally, I think it's a positive because I think if you look at the Indian IT services companies, they've been sort of falling far behind Accenture and their ilk in terms of servicing the AI customers in their customer base. So I think overall it's a positive for uh, HCL Tech, and let's see how the others start reporting. But I would see that as a positive.
Okay, you would see that as a positive. Do you think this could also be the beginning of, a positive move on the IT sector? It's been one of the worst performing sectors of 2025 with the underperformance that they have displayed. Of course, there were a lot of uncertainties that they have dealt with and the earnings weakness. Now that the commentary, like you pointed out, is better than expected, numbers are coming out better than expected, it could just be a matter of one more quarter when things are back on track and on the moving space then. And do you believe then now is the right time to start looking at IT yet again?
Definitely, I think we should be looking at IT, but my sense is that the mid cap or the more niche players within IT space would probably do better compared to the larger ones, which are much more diversified and you know frankly much larger. So looking at the mid cap, small cap IT companies would probably be a better idea than to look at some of these larger ones.
Okay, got that. So that's as far as the IT space is concerned. How are you looking at the banking space at large, Mr. Basu Malik, last few months and quarters, and this entire year also, if we talk about? Among the large indices, it's the Nifty Bank that's outperformed. Others have been absolutely flat, like Nifty, Sensex. When we talk about mid caps and small caps, they've actually virtually given no returns this year. But it's the Nifty Bank that still managed to pull up in double digits, about 10 odd percent year to date odd basis. How are you looking at the banking space? Do you think the outperformance will continue?
So I think a large part of the outperformance of banking had to do with the rate reduction, and if I look at the inflation that has come in last the latest one, that is also significantly lower than the RBI band of 2 to 4%, right? It's lower than 2%. So RBI does have the opportunity and the space to reduce rates further. Uh, Probably they're holding back just to monitor what the trade deal and the tariff etc. Scene is going to look like. And if we get a further rate cut, again, it is going to boost uh, the banking sector. It is going to boost the consumer sector. Uh, it is going to boost credit. So overall, I think and if I look at the MFI space and those areas, NBFC, MFI, I think they are also sort of getting out of a slightly bad phase. So overall, I'm pretty positive on the banking, NBFC, MFI kind of space.
Okay, fair point. Now, let me also ask you on the broader question on the macros improving, Mr. Basu Malik, and what does that mean for the overall economy? And then we can again come back to some stocks and sectors when the markets settled in the pre open trade. Inflation number at a 99-month low, coming in at 1.5%. 7 straight months when it has remained below 4%, and now it's also slipped below the lowest band of the RBI comfort band of 2 to 6 odd percent. Now it's at 1.5 odd percent. Food inflation in the negative territory. How are you looking at this? Metric, and what would this mean? And does this also have to do with the GST cuts, with the kind of reflection that we've got in September?
Uh, there might be some relation with GST cuts because overall the prices of goods would have reduced to an extent. But largely, if you see, inflation in India is driven by mainly two things. One is food inflation, and the other is fuel inflation, right? Crude. So both food and crude, prices have not moved upward significantly, which is why you see that inflation is tapering off. And with very good monsoon that has happened. In fact, in a lot of places, we've had more rains than was expected. Overall, I think food inflation is going to be benign for some time, and if that happens, then inflation could be around this 1.5 to 2.5 range for some time, which ultimately that is going to be a major benefit for the economy.
Okay, and with this kind of a print, what do you expect the RBI to do next? It's been holding its power for some time now to keep status quo on the rate front. Do you think this will further urge the RBI to cut rates?
I am not sure because I think the RBI may hold out till the tariff situation is clear. Because
Okay.
what if you see what the RBI is now doing is, they are not tinkering with the rates, but they are more focusing on liquidity, right? So they are doing more of liquidity management than tinkering with the rate. So they might continue doing so, or they might just try to look at the currency side of things. So a lot of things to be done, or that is being done by the RBI behind the scenes. Uh, Rate cuts, my hunch is they might wait it out till the tariff situation is clear.
Okay, got that. So the RBI could be holding up. Let's actually look at how the markets are reflecting the move in the pre-open trade. Now it's already 9:08, and let's see how things are settling in the pre-open. 25,277, a 50 point of an uptick on the Nifty. When we talk about the sectors, it could be IT, it could be metals that could be hovering higher, even real estate and some broader market names also that could be hovering higher. I think only we are given to understand that the Nifty bank could be opening softer, but it could be a broad-based move on the positive side, at least what is being indicated from the pre-open trade. Among the top movers, you will find HCL Tech. After the earnings, it settled about 1.3% higher. Apollo Hospitals could be opening 2.3% up. Eternal, Hindalco, ICICI Bank could be some of the other moves that we could be expecting to see as well. But apart from the secondary markets, it's also going to be the primary market that will be in focus today, viewers, because LG Electronics will be debuting on the D Street as well. Remember, the IPO had got 54 times subscription as well. So it's also, breaking a lot of investors' hearts because the allotment would have not gone to as many people as they would have liked it to. And the grey market premium in the unlisted market, in the unregulated market, is indicating a 38% kind of a pop. At 9:45, we will get to see how the stock is getting settled on the BSE and NSE, and what kind of a listing can we expect. Will it be a big listing pop? Will it be a higher premium at this point in time, is what we will wait to find out. But let's try and understand from you, Mr. Basu Malik. Tata Capital was seen again as something that was disappointing on day one at least. And LG Electronics, on the other hand, it had seen much higher subscriptions. It had seen much higher demand right from day one. Help me understand what's your view there. For those who have got the allotment, should they just take the profits out and probably look at that listing pop as the gain that they should enjoy? Or is this a stock to be held on to? And for those who did not get the allotment, could listing space be, that they should be looking at?
So normally, you're aware, I don't like IPOs.
Yeah.
This is one of those probably very, very rare exceptions where I think, this is a great company, one of the market leaders in India, and very, very established for many years, right? Probably, 25 years, they've been at the forefront of the consumer durables market in India. Very, very good products. And I would be, very surprised if it does not get into the mainline indices like, Sensex, Nifty pretty soon. So anybody who's got allotment would, be, they just need to sit on it. I mean, you don't need to just do anything. Uh, my sense is that it's going to, a lot of institutions would want to buy, so there is going to be definitely demand for the stock for some time to come. So I don't see LG Electronics sort of falling after listing like a lot of other IPOs do. So there is going to be, in fact, I would say even from listing, there is going to be upside in the near term as well as in the long term.
Okay, got to understand this as well. It's 2 minutes to go before the markets open, and of course, all eyes will be on the secondary markets. We will, of course, come back to the primary market space at 9:45 again to see what kind of a listing can we expect for this one as well. But you've definitely got Abhishekji's view on this one. What about Canara Robeco? Have you looked at that one? Today is the last day of the IPO. Since you did say that IPOs is not a space that interests you too much, but Canara Robeco, coming from a big conglomerate again, global parent.
Again, I think this is a space, if you look at, I think Canada has, both the AMC as well as the insurance company IPOs happening. And I think both are interesting, uh, not because of the company per se, but the overall space, because I am personally very, very bullish on the financial and the wealth management space in India for the next 10, 20 years. Because if I look at the demographic, if I look at the change in pattern of savings and investment that is happening over the last, 5 to 7 years, I think this is a space where we are just getting started. So, and we've seen how the listed entities in this space, especially the wealth managers, the AMCs, have performed over the last few years. So, long way to go. I think, the these are good companies. So, whether you want to, go for the IPO now, or you want to wait it out for a couple of quarters, like, what I tend to do normally is up to an investor. But these are good options to get as, secondary market investor a few quarters down the line.
Okay, fair point. Let's start looking at the markets and we'll come back to the conversation then. 25,291. So we do have a 70 point of an uptick on the Nifty right at the opening tick, viewers. Now at 25,300 odd level. So you are seeing a 1/4% of a jump on the Nifty. Sectors, barring financial services, the Nifty Bank, rest of all those sectors are actually opening higher. Metals are shining the brightest. You can see almost 1% uptick there, almost a 1% uptick even for the IT space as well. HCL Tech is opening in the positive zone. You can see 1.6% move on HCL Tech, now even higher, 2.5% higher. It's the top mover now after the earnings have come in at 1530 odd levels. Following this is Tech Mahindra ahead of numbers. You can see 1.5% move there. Tata Steel is up in trade too. You also have Hindalco from the metals pack, that's also shining bright. Infosys from the IT pack. Then you also have Eternal, that's among the top movers. So metals, IT, oil and gas, realty, and the broader markets also hovering higher in trade, at least at this point in time. What is dragging? Well, you have names like, of course, HDFC Bank, you're looking at Titan, you're looking at Dr. Reddy's, Interglobe Aviation, Maruti Suzuki as among those top laggards in trade. Any moves that we can spot on the top gainers there when we look at the broad Nifty 500 names that we can mark out for our viewers? Landmark Cars is up by about 6 odd percent. There's also this news flow of the updates of the sales that are coming in for the company that have really led to this move today. Some of the other smaller names that are also up and about, but we'll give it some time before we do see. Tata Investment Corp is another big one that's actually moving on the broadest index, but many others are just small names, and we'll come back to it in a bit. But let's quickly look at understanding from Mr. Basu Malik, what about the metal space, sir? Why do you think that's shining bright? Why are all the technical analysts believing that this is going to be the year that we should be watching out for metals outperformance? Clearly, precious metals have started it, and that it should follow through into the hard metals as well. Do you think fundamentally also metals is getting into a structural move on the positive side?
Be very difficult to take a call fundamentally on metals, because ultimately it's purely a demand and supply game, and also it has a very high dependence on policies, on tariffs, on taxes, and things like that, on duties. So very, very difficult to take a call on overall metals. But definitely what we are seeing is a sort of a crazy run in silver, in gold, in platinum, copper. So I think there is definitely a shift away to tangible real assets, and metals is one of them. So obviously that is where the trade is happening. Whether it is fundamentally sound or not is something that I have honestly no clue. But is it good for a trade? Definitely yes.
Okay, let's also welcome Arpit Beriwal, analyst for derivatives, wealth management at Motilal Oswal Financial Services, now with us on the program. Hi, Arpit. Good morning to you. Your sense on the markets? They've opened up on a positive note, about 60, 70 points higher, nearing that 25,300 mark. Do you think up in the run up to Diwali, we can actually go ahead and yet again make an attempt to retest our erstwhile highs? Do you think that's possible, or will it be in a range?
Having me. So if we talk about first the headline indices, if we talk about Nifty. So Nifty, if we see from last couple of months, since August almost, Nifty has been trading in a broader range between 24,400 to 25,600 levels. And this has been that perfect kind of a time correction that we have seen in last almost 1 year, where our sense is that index is likely to consolidate with a higher base and stock specific action is likely to continue. So ongoing result season is definitely likely to trigger the momentum. But our sense is that Nifty, the major hurdle will be around 25,500 500 levels, that would be a key level to watch out for. And any sustenance of monthly close above 25,500 would only trigger the fresh highs towards 26,000, 26,200 levels. In the meantime, we expected to consolidate with a higher base, and now the higher base has shifted from 24,000 to now it shifted to 24,750. So I sense the overall bias will be positive with major support around 25,000 for an upside move towards 25,550, 25,600 levels. Now, if we talk about Bank Nifty, so Bank Nifty has been relatively outperformer where we have seen stock specific action. Bank Nifty is just couple of percentage low from its previous all-time high. And looking at the setup also of Bank Nifty, definitely Bank Nifty can scale new highs. This week we have HDFC and ICICI Kotak result on the coming weekend. So look at the chart setup wise, 56,200 is a major base for Bank Nifty. Until it holds above this levels, we can see an upside move towards 57,000 and then previous all-time high near 57,500 that we can see soon in Bank Nifty going forward.
Okay. Any two stock ideas, Arpit, very quickly that you can mark out?
Yeah, so there are a couple of ideas. So first would be from the AMC space, that is the NBFC space, AB Capital. So if you look at the chart structure of AB Capital, the stock is in secular uptrend. The nature of the stock is quite strong on the monthly and the weekly setup. So from last few days, we have seen some corrective move from 311 levels, but on the daily scale, it has negated the formation of lower highs. Risk reward is quite favorable. We can see upside move towards 315, 320. Second would be from the capital market space, that is CDSL. So capital market theme has again back into action, and if you look at the chart setup of CDSL, CDSL has been consolidating on the weekly scale from last almost 8 to 9 weeks, and a sustain is above 1620 has definitely triggered the breakout zone above 1620. The stock can head towards 1700, 1720 levels positionally. So CDSL and AB Capital would be a preferred pick for the coming week.
Okay, got that. We'll definitely keep an eye out on these two stock ideas for all the traders who've been watching the show to look at some early moves there, what one can participate in. But Abhishek ji, coming to you, and now I'll talk to you about the Tata Motors demerger that's now into effect, and all those people who have got Tata Motors shares in their demat accounts as of today will now be looking at the adjustment that will take place. Since the Tata Motors shares will be adjusted for the demerger of the commercial vehicle business today. Today is the record day, and the passenger vehicles business will now be called as Tata Motors Passenger Vehicles or TMPVL. That will consist of the domestic passenger vehicles business, Jaguar Land Rover, stake in Tata Sons, Tata Steel and Tata Technologies along with some other investments. And the demerged commercial vehicles unit will consist of the domestic commercial vehicles business, Iveco business, whose contribution is not accounted for in the targets that we are looking at this point in time, and the stake that it owns in Tata Capital get. Now, the big question is how will this be valued at? Nomura has valued the commercial vehicles business at 365 rupees per share, and it has valued passenger vehicles entity at 367 rupees per share. The brokerage believes that post the demerger, the price target for two entities is almost split evenly. So let's try and understand from Mr. Basu Malik. Could you help our viewers really understand what's at play here for those who've been existing Tata Motors shareholders? What should they expect? For of course, there'll be one additional share that they will be looking at. So what should they expect in terms of the prices there? And for those who may be now looking at an opportunity to participate in two different businesses with their own thought, how should they be proceeding?
So, actually, I am also in the process of understanding how the two demerged companies is going to be, what value to attribute to both of them. But structurally, there are two things. One is the challenge today in the Tata Motors business is more in the passenger vehicle business because of Jaguar, right? Because of JLR, because that is where the stress is coming from. The opportunity also is there because of the migration of both JLR as well as Tata Motors to the EV space. Because if you look at Jaguar, their sales have been down drastically, not because they are not able to sell, but because they have made a commitment to transition to EVs. And as and when it happens, say over the next 1 or 2 years, the sales of JLR is going to go up. And in India, already Tata Motors has been a market leader in EVs. Uh, with more time, I think adoption in EVs is going to increase in India. So, and they are the incumbent market leaders. So, both the risk and the opportunity is there in the the Tata Motors passenger vehicles company. For those who are more interested in uh, the commercial vehicle, I think commercial vehicle is a very steady state business that Tata Motors has. India, Africa, etc. They have a very strong business, and now with Iveco coming in, I think it is going to get better. So, but it is not going to grow as fast as the passenger vehicle business over time. So I'm yet to actually figure out the valuations that need to be attributed to both these companies. But the characteristics of these two companies are different. One, the passenger vehicle is more for people who can stomach a lot of ups and downs, and the other one is probably more for people who want a stable, reasonable growth.
Okay, got that. I'll also ask you, Arpit, technically, how would you advise on Tata Motors today since day one of finding out the value for each?
Sakshi, if we see overall, if I along with the today's structure, if you look at the bigger time structure, auto index where the auto index their life high territory, Tata Motor has been a huge underperformer from last couple of months. And if you look at the immediate chart structure of Tata Motor also, sustenance level says that 700, 720 is a major supply zone for the auto for Tata Motors particularly. And until that, the stock is likely to consolidate within a range between a broader range between 620 to 720 is the broader range for Tata Motors. And technically, I think right now the underperformance is still there. We have better pockets within the auto basket where we can see more outperformance, such as M&M, TVS Motor, Hero Motocorp. So our sense is that it's better to wait for some cool off and better that the corporate action let it settle and we'll get better opportunities. But however, we have better opportunity in the auto sector with the likes of TVS Motor, M&M, Hero Motocorp. So we like our clients and traders to go with the better outperforming counters within the auto basket. And for Tata Motors, better to wait and watch, wait for some stability, and then only enter fresh positions from a longer time view.
Okay. Mr. Basu Malik, most of the brokerages have penciled that the listing of the CV business could take place only after 1 to 1.5 months or 30 days to 45 days. Till that time, should one be really looking at even the passenger vehicle business at this point in time? How would you advise?
It depends on whether you are interested in the passenger vehicle business. Like I said, it's the passenger vehicle business is the one which has the higher risk reward. So if you're interested in something like that, and if you can hold on for maybe a few years, then passenger vehicle business could actually give you decent returns. But you know, it's not something that is going to be a linear upward kind of movement, because the JLR component of the passenger vehicle business is something which can upset the entire equation altogether.
But do you think that the recent GST rollout that has happened of the rationalization, that do you think has provided some kind of a tailwind to the passenger vehicles business of most of these companies, which has been so far lagging, and therefore premiumization as a trend, has probably picked up pace. Those who had a certain budget for themselves for the cars or the vehicles that they were to buy, and now you have a higher car or a premium car which may be now on a similar budget available to you because of the GST cuts. So how are you looking at that trend play out for the PV business of auto companies, including Tata Motors?
So GST is definitely going to help, right? But the challenge is that GST is only for the Indian business. The moment you look at the global, passenger vehicle business, including JLR, right? There, there is no impact of GST or anything else, right? There, it's primarily what is happening all around in the world, in UK, in Europe, in China. That's where their biggest market is. So there are things which are happening. So luxury tax threshold has been cut in China. So uh, that can impact JLR. Overall, that the point I'm trying to make is JLR will actually make a big difference, both upside as well as downside in the overall passenger vehicle business. So it's not just what is happening in India, which is not the case, for example, in the other listed auto players like a Hyundai or a Maruti, etc.
Okay, fair point. Now, help us understand, Mr. Basu Malik, if I have to ask you towards the end to give our viewers a sense of how to play the markets from this festive season till the next festive season. How would you advise them? Have you penciled in a note for your own clients for this Diwali, for this festive season, with a list of sectors that you are betting big on to play over the next 1 year, and the key stocks that one should be really looking at adding to their portfolios in this festive season if somebody has to start off by creating or rejigging their portfolio? How would you advise them?
So I'll be, probably slightly contrarian, and
Okay,
say that you know we might be headed significantly higher in the next 1 year.
okay,
That is my base case. Uh, Next 1.5 years, my sense is we are looking at a Nifty of 32,000. If that happens, then there is a definite possibility that there are a lot of small and mid cap companies who will perform splendidly. Uh, my take would be to continue to focus on domestic plays, whether it is through engineering, capital goods, uh, data center kind of themes, uh, power, electrical, the entire space where which is related to the infrastructure input of the country. Railways again is coming back. Defense is going to do well. So huge opportunity space in India. I think what we saw over the last year was more a pause in the long-term bull market. My sense is that we are somewhere, probably in the first stages of getting into the next leg of the bull run. So, uh, at least that is what I'm telling myself. I continue to remain bullish all the time, which is not good, but that's the way my mind works. And my sense is that we will be significantly higher next summer than this one.
that's a good optimistic note to end with you, Mr. Basu Malik. And of course, we'll catch you around Diwali as well. But, of course, season's greetings to you and to your loved ones at large. We'll catch you around, and we'll hope that this optimistic note definitely comes true. It's been really long time that investors have been waiting for some kind of an outperformance to return to the D Street. Virtually no returns on the index level has disheartened many of those first-time investors who were only used to of seeing that the markets only go in one direction. That's one that's on the upside as well. Thank you so much. Appreciate your time.
Thank you. Thank you.
Arpit, coming to you. First 15, 17 minutes out, what have you observed in the markets? How do you think this session will pan out? Remember, it's the expiry session as well for the week. So, do you think yesterday, look at the India weeks, it went up, what, in double digits, 10, 11% odd or so. So, does that have, an overhang? Even if we've started on the positive note, do you think this can get into a little volatile zone, or do you think we'll be comfortable?
So looking at the first, we talk about the wicks. This effect has been largely on the effect of post this UBO wicks that we have seen sharp week in the last weekend, where the CBOE wicks was up by almost 25-30%, and yesterday definitely it was up by 10 to 11%, but more or less it's just following the global market. That's where the story is coming out from. If we talk about our structure, if we talk about Nifty, generally Tuesday has been trending expiries. So last 3 to 4 patterns that we have seen that every Tuesday has been more trending as compared to the other days of the week. And our sense is that Nifty immediate support is around 25,200 to 20 levels. And until it holds above that, we can see an upside move towards 25,350, 25,400. Having said that, one thing you have to keep in mind that overall index has been trading in a range, and the initial movement that you used to see where a gap up moves are almost 200, 300 points, that move is definitely far away. And on the immediate basis, definitely our stance will be positive. On the positive bias, still Nifty holds about 25,200 levels. For upside move towards 25,350, 25,400. Also, result season has also started. So definitely each stock will have definitely impact on the heavyweight stock will have an impact on the Nifty along with the bank Nifty. So our sense is positive till holds above 25,200 to 20 levels. For an upside move towards 25,350 and then 25,400 levels for the expiry day point of view.
Okay, got that. Let's try to do some stock spotting. First, IT sector. It's the top mover in trade today. So let's try and understand how should one trade today. The big movers like HCL Tech post earnings, Tech Mahindra ahead of earnings, Infosys and the rest of the pack. That's all up and about in the IT pack right amidst the earnings season. Your sense, how are you trading some of the stocks here?
Overall, if we talk about the IT index, this sector has been a huge underperformer from last almost 6 months, and definitely we have seen some bounce back moves in the sector. But definitely, I think looking at this earning season and the stock specific wise, it's purely a stock specific play rather than a sector play. So our sense is that it's better to take one stock at a time from a earnings outlook wise, and better to build strategies rather than trying to play a unidirectional move. So our sense is that within the IT pack overall, as today we have come out with the HCL results and today we have TechM results. So definitely it's better to play one stock at a time and better to deploy strategies. So our sense is that to play the earnings season, to play the earnings, better to deploy strategies such as bull call spreads or bear put spreads to play the swing, because you never know that if the earnings are misses. So definitely we can see a knee-jerk reaction also. But our sense is that definitely on the downside, IT downside is capped, and from here on slowly steadily we can see an uptick. So within that, if you look at the chart structure of particularly Coforge or persistent relatively, so Coforge has been relatively outperformer in last couple of months, and the mid cap IT has been shining comparatively as compared to the
Okay.
large cap IT. So I think Coforge has relatively have much more legs going forward and have much more momentum can be expect going forward. Along the persistent would be a second pick, where 5,000 has been formed, a very base formation has been set on the weekly and the monthly setup, and slowly steady the stock can head towards 5,700 6,000 levels positionally. So persistent Coforge would be a preferred pick within the mid cap space. From the large cap space, HCL Tech would be a preferred pick as the risk reward ratio is quite favorable from the lower levels.
Okay, fair point. I hope this has also helped you out, viewers, in terms of understanding how to look at the IT move, big IT move that we are seeing amidst the earnings season as well. In the metals also, Arpit, do you have some picks that you would look at this point in time? And also, if you could highlight for us, what is the metals index really indicating? Do you think there is a lot of momentum right ahead that one should tap at this momentum too?
Sakshi, if we talk about the metal index, it's at a very interesting junction. It's near life high territories where the index and the broader indices are still lower between their lower from the life high territories. If you look at the monthly setup, so there is something definitely a big offering in this index as a whole from a 3 to 6 months view. And our sense is that definitely from next 3 to 6 months view, metal index is likely to outshine. And within that, our preferred picks would be from the metal bag, as we have suggested with the JSW Steel, Hindalco, Vedanta. So along with that, if you see, we have seen some sharp surge in aluminum, copper prices also, and that effect is clearly seen on the metal index. So it's better to build a basket of metal stocks, 5 to 6 counters. That will definitely help us to generate additional alpha. And within the basket, you can pick a stock such as JSW Steel, Hindalco, Vedanta, Hind Copper, Hindustan Zinc, to create a blend of all the stocks and hold it for 3 to 6 months. And definitely, I think looking at the chart setup wise, we can see good double-digit returns from a 3 to 6 months perspective. Overall sense is bullish and likely to be going strong going forward.
Okay, fair point. I hope this has also given you some understanding how to look at some of these stocks there from within the metals pack. But it's the banks that have fallen back. You know, it's the banks that are giving up some of the gains that they marked out over the last couple of sessions. So you have PSU banks, overall Nifty bank that's down. Pharma index is also slipping a tad bit in trade as well. But let's try and understand what's happening in the broadest index. Anand Rathi Wealth, 5.5% higher. Remember the earnings, play there that one is watching out for. MCX is higher. Traxon Technologies is higher. Vari Renewable Technologies that had moved up 10% higher in trade after the earnings yesterday. And again, another day and 6% of a move can actually be seen on a day like today as well on this one. Vikram Solar is up by 5%. Landmark Cars is now up by 10, 11 odd percent. Sales numbers that have actually come in have moved that one higher. You're also looking at many other stocks that are actually now participating in the broadest index. Tata Investment Corporation. What's exactly your top choice from the within the Nifty 500 basket if one has to catch this momentum for a big play?
Sakshi, if we see overall, the broader market has been relatively resilient. So even if you've seen the index has been quite dull from last couple of months, but overall the broader market and the action specific action is quite good overall. So it's better to play with a sector based approach. And if we talk about first from the sector would be from the AMC space itself on the NBFC particularly. And as we've already discussed about the stocks such as AB Capital. So I think from the broader market perspective, definitely AB Capital is a one of our preferred pick where we can see a good 8 to 10% up move towards 330, 340 levels positionally. So NBFCs is one of the top pick would be AB Capital. Along with that, if we talk about the AMC space, so definitely Nippon AMC also has been a quite outperformer. So that also looks very strong on the chart. And yesterday also it has given a fresh range breakout. So second would be a Nippon AMC. Third would be from the if you talk about the hotel and tourism space, Lemon Tree is one of the very stock that looks very attractive from the risk reward perspective, as the stock has given a range breakout on the monthly scale, and suppose that the stock rallied towards 180, 185 levels, and it has been a corrective phase. But now it's again back to its previous support zone. So I think Lemon Tree also looks quite favorable, and as the tourism and the upcoming season is likely to play it out, so AB Capital, Nippon AMC's, Lemon Tree, and along with that, one counter would be from this space would be from the healthcare pack, where the slowly steadily rally has been continuously in uptick, that is Fortis Healthcare. So the stock has seen a spectacular run in last couple of months, but there is no way stopping to it, and I think definitely the stock can head higher towards 1200, 1300 levels. So I think these are the couple of ideas from the NSE 500 that looks quite strong positionally from here on with a couple of weeks to months time frame.
Okay, fair point. Those are some of the broad market moves that one can definitely track at this point. But we are actually seeing more and more sectors actually come under some pressure now. Look at private banks, PSU banks, both are now down. FMCG auto is now down. Pharma is also now down in trade. A lot of these sectors are actually coming under some pressure just before the first half an hour candle is already formed, within 25 minutes of trade. So PSU banks, pharma, auto, FMCG, private banks, financial services, at least 67 indices have now slipped into the red right now, led by the Nifty bank that's also weaker in trade, even though the India VIX is in the red zone. How are you looking at this pressure that's building up on some of the sectors right now, just before the first half an hour of trade is out? Even on the Nifty, we've come off the high point already. We're just about 25,252 is what we are given to understand. So half of what the move that we had seen right in the opening tick has already been retraced back. How are you looking at this, Arpit?
So actually, as we have been analyzing charts for quite a long time, and we have seen that this current structure of the market has been quite of a range bound kind of a market, where the buying is visible at the lower levels, but at the same time, supply zone is intact at the higher zones. And this has been the nature of the market, where we tend to get bullish above 25,500 for 26,000 target. From there on, the stock, the index starts correcting towards 24,500 levels, and from there on, again we see a recovery levels. So the overall approach for this should be the best way is to select few counters, play on that time frame on the multi-time frame analysis, and keep buying and selling within that range. So generally, if we see the texture of the market, as of now, 25,200 is a major support for Nifty for intraday basis for expiry play, and a sense that till it holds above that, stance will be positive. But within that, definitely there would be some swings within the range of 50 to 100 points, and this has been the texture of the benchmark indices. Along with, if we talk about the mid cap and small cap, the stock specific action is quite good. So definitely some cool off is seen from the higher levels, but the stocks that are outperformers, as we discussed the right at the start of the session also, we have to pick the outperformers. So within the auto index, where M&M, TVS are at life-high territories, we have to stick with that counters rather than with Tata Motors, which is underperforming. So it's more of a stock specific approach that we have to closely follow. But overall, a sense would be positive till Nifty holds about 25,200 levels for the expiry play, and the mid cap, small cap also relatively looks good, though advanced signal has reduced literally in the favors of the bears. But still going forward, stock specific action is likely to outperform, and selective themes is likely to outshine.
Okay, got that. Let's focus on the primary market space, viewers, now. There is an indication that LG Electronics could be looking at a stellar listing in today's trade. LG Electronics on the NSE is settling in at 1710 rupees at this point in time. That actually indicates and almost 49%, 40%, 49% kind of an upside that we could be expecting on LG Electronics, viewers. Remember, the stock had been already, this IPO was the widely anticipated one. We've seen 54 times of a subscription across the variety of segments, NIIs, retail, HNI, QIB. You've seen across the board over subscriptions that have taken place, and therefore this was expected. Even the grey market premium was indicative of a 38% kind of a higher listing. But now what we are given to understand is that at 1710 is what you could be really looking at this stock to get listed, a 50% premium over the issue price there. So those who've been allotted might find themselves extremely lucky to get LG Electronics IPO. A 50% listing gain right at the first tick is what is expected of LG Electronics. Issue price was 1140 rupees per share on the upper end, and from that time you are expecting a 1710 rupee kind of a listing gain or a premium listing as well. So probably the best one that we could be seeing in the biggest IPOs that have got listed, upwards of 10,000 odd crore rupees in the recent times that we've been marking out. So LG could be definitely as seen as an outlier among the big IPOs category, finally letting go of the big IPO curse. Vis-a-vis yesterday, what we've seen with Tata Capital, only a percent kind of a premium listing. LG is in fact looking at a 50% listing gain, and that really reflects the kind of subscription and the demand that there has been for this stock. Arpit, did you apply for this one?
No, so we haven't applied for the IPOs, but definitely it's good to see that we have seen some good premium listing, and as festivities are picking up, so definitely brings a big smile for our clients and for the traders. So definitely there's good optimism that is going on, and definitely a premium listing is definitely good for majority of the people.
Okay, got that. So 9:46. Let's try and wind up now and look at Arpit to find out what should be the trading focus today. And amidst the volatility that we are already seeing, amid the markets already looking at some giving up some of those morning gains right in the first half an hour of trade, what should be the strategy and which are the pockets to stay focused on? Arpit, what would you advise?
Yeah, so first, if we talk about Nifty, as we have talked about, 25,200 would be the level to watch out for today's expiry play. And until it holds above that, our stance would be positive, and it would be a buy and dip stance with major support around 25,200 levels. So for the option traders, definitely I think as the market has been within the range, it's better to go with option strategies. One can initiate bull call spread by buying 25,200 call and selling 25,300 call at around net costing around 30 to 35 points. So that would be definitely better to play the upside swings. Along with that, if we talk about the stock ideas, so as we discuss about the capital market theme, we start discuss about the start right at the start also. That is one of our preferred pick from the capital market theme is the CDSL. CDSL looks very strong on the weekly setup, a range breakout above 1620 levels. Stock can head towards 1680, 1700 levels. That would be a first pick from the capital market space. And second, as you already discussed about the NBFC space, that is AB Capital, slow and steadily move counter that can again claim its all-time high towards 315, 320 levels. So I think CDSL and AB Capital are the stocks to watch out for. And for Nifty, one can go with bull call spread with major support around 25,200 levels. Having said that, the ride will likely to be choppy, but overall stance would be positive with overall buy and dip stance with a major support for Nifty around 25,200 levels.
Okay, got that. Thank you so much, Arpit, for being with us on the morning show then and for helping us identify the clear pockets there. The Nifty has turned red, viewers. 25,225 or 2 to 3 odd point of a downtick is what you see. So swiftly in the last 5-7 minutes of trade, you have seen that the markets have actually given up the morning moves already. Leading this fall is the Nifty Bank, private banks, financial services, PSU banks, all three segments which are under pressure. Also leading these losses are autos. You're also seeing FMCG and pharma under pressure as well. And IT index, although, is definitely bucking the trend, still holding up about a percent kind of a move. Remember, it had gone up pretty smartly higher, but that's also cooled off from the high point of the day. holding up about 0.7% of gains now. Oil and gas, metals and the broader market still in the green. On the Nifty, you have ONGC, that's the top mover now, followed by HCL Tech, Tech Mahindra, Apollo Hospitals and Max Healthcare from the Healthcare Pack, Hospitals Pack, that's also up. Shriram Finance, Infosys, BEL among the other top movers in trade. Towards the downside, Bajaj Finance, Eicher Motors follow. Axis Bank, Dr. Reddy's, Maruti Suzuki, these are all the stocks that are actually falling behind. But viewers, our Diwali coverage continues with getting you top market masters views on the D Street over the next somewhat. So get ready for an exciting lineup today that we have on Business Today television at 1:30 p.m. Hear from Vijay Kedia, the MD of Kedia Securities, sharing his market insights. And then at 4 p.m. join with Devina Mehra, founder and CMD of First Global, and Nilesha, MD and CEO of Envision Capital, revealing their market outlook and top investment strategies. So stay tuned, plan, profit and prosper with Business Today television. Thanks very much for tuning in for now. Hello and welcome. You're watching Business Today television.